So I'm on Betfair, and I can just pop over to the Brexit section to see what's going on. And it seems to have moved more towards Remain. Now, not so long ago, it was 1.25. So, the the markets were very confident it was going to be a yes. Then they weren't as sure. So, we can see it here. Firstly, there's now 44 million that has been bet on this market. So, I then tend to take what it says more seriously, that it's not a market with like 20 euro or something. And from this, say, hi, this is a Quant channel, in case you've randomly stumbled across this. So there, we use kind of maths or analytical thinking to try and understand data, that kind of thing, which would be used in finance. So a lot of the stuff we have is on finance, but we also look at trading. There's a playlist on trading. So once we look at this, the market action, when we're looking at the Brexit referendum, that is more like a normal chart that we'll see in a market. So that provides us with a vocabulary, and there are methods that are used when talking about this kind of data, since they come up in basically whatever you're looking at. You could be looking at currencies, you could be looking at a stock market, a share, a stock market, commodities, oil, gold. So, you'd have a random movement. There'll be times where suddenly it'll spike up and then it'll crash and that kind of stuff. So, getting back to our Brexit, this seems, the initial action, it showed, the basic range that at worst, the Brexit was like 50% probability, and it was 85% at best. Or you could flip it depending on your opinion. Now, looking at this, it looks like recently we're in a downtrend. So, it tried, things, people were very confident it was going to be a yes. Then it started to really drift down. Like, so if you invert the odds, you can get the percentage probability of the yes happening. Then it retested going high, but it didn't even manage to get halfway up before falling. So we'd call that lower lows and lower highs, because this high was lower than the previous one. It's not fancy, but that's the best really we can do. So then it fell and fell. Suddenly it was going, ooh, look, you've got these poll results and they're saying that the no is ahead or the gap is closing and all this kind of stuff, which is what I expected, even in the early Brexit videos, that you kind of want to, basically, the way I saw it, I think it's going to be a yes. And the main worry for me was if the turnout was going to be low. And the reason that the turnout was going to be low would be because people would take it for granted that it's going to be a yes. So it's very important to get people to basically bother to turn up. Now, I have no idea whether that's actually the case. That was just my, starting viewpoint. And then I'm looking at data to see whether that actually is agreeing with me or basically banging me on the head going, it's right in front of your eyes. Can't you see that everyone is saying it's a no? So basically the trend is still down because, it tried to go up again. No, tried to go up, because to me, the relative high would be this one. So it's not great. So anyway, that's what the markets are saying at the moment. Okay, so it's basically nearly 65, 66, that kind of percent confident that it's going to be a yes. So it it's more likely it's going to be a yes, but it doesn't look like it's a kicking and screaming banker. Now, I didn't bet on this because at the time the odds were useless. I mean, I think it was 1.2, 1.25 or something. I went for how strongly, like what the actual vote was going to be. So you can see here, I went for that it's going to be yes between 50 and 60 because I thought it was going to be a yes. And I didn't think it was going to be, a massive, 70% or 90%, because I mean, nothing is that, So it would be weird to have a poll, a referendum where the yes was so one-sided. So I got this at 3.25. It's now 3.05. So that looks like it's more likely to happen. This has fallen a bit. Now, since this is a market, I have the option to cash out because I can I could do the reverse bet, and that way I'd be hedged. So at the moment, I bet, say, €50 that it's going to be between 50 and 55. I could bet €50 that it's not going to be, or I could take a bet from somebody else and that kind of stuff. So I can basically cash out. So if I have the option, so if I change my mind, if I suddenly kind of go, well, really, is this a good bet? I mean, do I want to risk losing €100 just to make 59? There are other things out there. So, I don't have to do this bet. Yesterday, this cash out dropped to 80. So, again, it's not as if I'm able to cash out and get €90 and that option is going to be there for me whenever I want. That is reacting to the market prices. So that is worth considering. And I am periodically reviewing that. So the other way I'm playing this, trading the Brexit vote, is with the eurostoxx. Because as it looked like there was a greater likelihood of Brexit, the stock markets kind of felt under greater pressure because there's more uncertainty, there's a lot of risk involved. You're leaping into the unknown, basically. The thing there is that the stock market is a hugely complex thing. There might be, say, something going on in America, and then that's the correlation between the moves in the European stock markets and the American stock markets and other stock markets is pretty high. So you can't look at, say, the stock market and go, oh, that's all Brexit. I'm just going to talk about Brexit and, I can trade the eurostoxx based on Brexit. It's important, but it's not, the only thing. In particular, what I wanted to mention here was that from a trading perspective, this is a uncomfortable situation. Because yes, I think, there's going to be more tension in the run-up to the Brexit. So in a way, ideally, I wanted to short it and then get out just before the Brexit vote. Since I don't think I want to be exposed to that binary random event of whatever the result turns out to be. So what this is kind of saying is I've got these moving averages. So gold is the 50-day moving average. So the average of the last 50 days. The brown is the average of the last 20 days. And blue is the average over the last 10. Now, if they are all aligned, like we have here, the gold is above the brown, is above the blue, then you have a nice calm trend. So here we do have gold above brown, above blue. So that's the kind of thing I want. The trend seems to be down. So if you're in a downtrend, you want to be short. In a downtrend, when the market tries to move up, it fails. So you're going to get lower highs and lower lows. But there's a timing issue here because it's already quite extended. If there's a big gap between these lines and where the price is, the price will tend to move back to these moving averages and kind of then continue its downward move. So we can see this here. It fell a bit too much, moved back to the blue line, and then it calmly would be falling. It fell a bit too far. So again, it went back, then fell. So at the moment, this price seems overextended. Also, and we mentioned this in the playlist when we looked at trading a bit, you have the RSI, and that is a kind of a sentiment indicator based on the stock market prices. So essentially, if the RSI is very low, like it is here, that is the market is overextended. So on average, if the RSI is down to 70 or down to 30, it will move back until it's about 40 or 50, depends on the market. But you basically don't want to be entering, you don't want to be shorting something when the RSI is already down at 30. You more want to short it when the RSI is at 70 or 60, when it's when the market around you is full of people who are very enthusiastic buyers and are desperate to buy and don't really care about the price. So the price is overshot. So I did short it a few days earlier. That went well. But then yesterday the market turned. So pretty much the two trades cancelled. Because basically, yeah, I did think that this was not an attractive market. So this is more from looking at the markets and the opportunity that the uncertainty of the Brexit vote is providing us. We might get good, say if there are things that you wanted to buy, the Brexit vote might give you an opportunity to snap them up as the prices of the good things, the old throwing out the baby with the bathwater analogy. So what else? Just want to think 1 second. So we've seen that the markets are saying they expect it to be a yes, but the confidence is slightly lower, and the stock market and how that's turning up. You could also look at currencies. So euro, sterling, sterling dollar, perhaps would be good ones. Though the dollar is a bit, since there was a very bad jobs figure recently enough, and so people thought that we were going to get a series of interest rate hikes, and that had been kind of priced in. So the dollar had basically strengthened, but now it doesn't look like we're going to get those hikes, and so the dollar has fallen. So when you're looking at sterling dollar, it could be that the dollar fell and that's why sterling's going up, rather than sterling having done anything. As I said, it's complicated. So just to wrap up, now I mentioned in a recent enough video, I think maybe even the last one, the comparison between, you have polls will be coming out, and then you have the betting markets. And basically, I think, and I gave a link to a video with a discussion on that on Bloomberg, basically the betting markets tend to do better than the polls. So you'll be getting poll data left, right, and center. I wouldn't have as much confidence in them. Like they were totally wrong in the last UK election, as I'm sure you remember. So I'd have more confidence in what the betting markets are telling me than the polls. That's just me. But there is something even better. So I'm just going to touch on that, and once I have something a bit better, I'll mention that a bit more sometime in the next few days. So basically, the thing that has done better than even the betting markets is social media. So here we have, say, Twitter. You can just look at how many people are saying hashtag stronger in and vote out. I think they seem to be the relevant tags. And this is interesting because you can see how varied the country is. So Wales is very much in. These parts of England are in. These parts are out. Not all of Scotland is in. I thought Scotland was super in. Again, I don't know. Maybe the populations there aren't high. Otherwise, and you can do that yourself. You can have a look on Twitter. Otherwise, there's Google Trends, and as it says here, so on Google Trends, if you looked at recent referenda, so in Ireland you had the same-sex marriage referendum, and basically you got the same. That was exactly predicted using Google search data. And also there's a referendum in Greece that was correctly predicted using Google. I think that the British election, that was correctly called using Google as well. So basically, Google Trends seems to be a very good, the best I'm aware of, gauge of what is going to happen. And so if I did have great confidence in what Google Trends was telling me, then I could compare, compare whether there was any disagreement between the betting markets and what Google Trends was telling me. So if Google Trends was telling me, like say before the last election, I'm sure I would have gotten superb odds to back a Tory majority government. None of the TV programs, none of the newspapers, nothing I'd heard mentioned that. It was going to be, yeah, I mean, the result was quite a shock. But Google Trends had exactly gotten it right. So if I just followed Google Trends and had faith in if I'd done enough study on it, and I kind of went, okay, I'm willing to bet, €100 or €1,000 or whatever, you could have basically done rather well. So ideally, I'd love to be in that position. My Google Trends and analytics stuff isn't like, I don't have that technology at a very high level. We are doing on the Quant channel. So, and we are going to be, so we're looking at getting market data, fitting models and that kind of stuff at the moment, though we are going to be looking at sentiment analysis. I have begun doing data mining on Twitter and that kind of stuff, but it'll probably be 6 months before I'm happy with that. So yes, we're looking at Brexit, but from a quant channel point of view, I'm more interested in the techniques, the methodology, because yes, we're having this Brexit vote, but the techniques, like if I was able to, if I had excellent Google Trends technology, which then did correctly predict the result, then we're always going to be having this kind of thing. So we are going to be having the US elections. So if you could predict that exactly, or if you could predict that well, you could do well from the betting markets. Now, unfortunately, by the time I have the relevant technology, I'm sure other people already will, and they will arbitrage the betting markets. And so then the betting markets will be as accurate as anything. So, in short, if you knew that the probability of a yes was 70%, and the betting markets had the probability of yes at 50, then they're giving you the wrong odds. So you would keep buying those bets up because they're giving you the wrong, they're giving you better odds than is fair. But if you keep buying until the price is closer to the fair value, then the betting markets will reach the fair value. So the other people, the other groups who are, professionally doing this, professionally doing the data mining of whatever they can find, they're going to set the betting market at exactly the correct level. So in that respect, I would say just using the betting markets is your best bet.